$50,000, bringing gains to almost 19% for this month alone, even with today's drop. And potentially driving the rebound is Bitcoin's hash rate recovery. It's a measure of computing power used in crypto mining and processing, and it plunged after China's mining ban. But hash rates have started to tick higher in July, right around the time that Bitcoin bottomed. And I must be the luckiest anchor in the world because still with me is Vildana Hajric. And Vildana, what a month it has been for Bitcoin. Just set the scene for us. What has been going on?
Well, it's really interesting to look at the charts because if you think back about a month ago, Bitcoin actually fell below $30,000 at one point. And back then, I remember speaking with a lot of analysts and especially chartists who tend to dissect the charts sort of in like really tiny details. They were predicting that Bitcoin could continue to fall just because that had been such a key level that they were watching, that maybe it would fall to 22,000 or 20,000 even. And so the opposite has happened. And that's been happening despite some of these negative headlines, including the crackdowns in China and even some regulatory concerns here in the US. And so we actually had Bitcoin touching $50,000. So it's been a really remarkable recovery over the last couple of days. I think it's up something like 60% since some of those lows that we saw in July.
So for more, let's bring in Meltem Demir. She's the Chief Strategy Officer at CoinShares. And Meltem, thank you so much for being here. I'm curious to hear your thoughts on this rebound. Who's driving it? You have a lot of fund flow data at CoinShares. Is this mostly institutional, or are we seeing retail step in here?
Yeah, so great question. And this is the question we try to answer at CoinShares. We have $5 billion in assets under management on our platform, primarily in crypto ETPs, but also in equities. And I think what we've seen, so as Vildana mentioned, in May, we saw a lot of leverage coming off. A lot of that was driven by retail and then followed by leverage coming off on the derivative side of the market, which then led to institutions selling. On the fund flow side, we saw of the global 50 billion in AUM across crypto funds that are publicly traded and listed, we saw a lot of sell-offs. We've seen net outflows week after week after week. We had a 6-week run of outflows, and last week we switched to a slight inflow of 21 million. But again, I think what we've seen is throughout the summer, institutions who entered into the Bitcoin trade in early 2021 wanted to crystallize gains in their P&L perhaps. We see a lot of participation from hedge funds and more traditional managers who may be looking to lock in those gains and then started rebuying at around 30, 35 as we saw recovery. But it's been institutions and retail, which is important to highlight. Crypto is very much still on the spot side a retail-driven market.